What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw the S&P 500 closing at a brand new all-time high and we're finally getting through those big tech earnings. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we saw SPY closing at a brand new all-time high today, closing up 0.64% and closing above that price target at $418. We did get a price action close back above the 5 EMA and we're still maintaining this bullish trend. Now SPY started the morning as a bull trap and then turned into a bear trap by the end of the day. And if I switch over to an hourly chart, you can see exactly what I'm talking about. We had that big gap up and we had that 3-hour flush and it did look like SPY wanted to go lower. And on this hourly candle, you can see that we were down right around 416. Now this is why it's important to not get caught up in the intraday price action without knowing the critical support levels. So you can see nothing was violated on that hourly candle and we did find support off that level and went back to all-time highs. So this bull trap did turn into a bear trap and now this could be yet again another bull trap. So right now you can see we will need to find another hourly support back above that all-time high level at $418. So going back to the daily chart, know that we did meet our price target now at 418 and we need to see another price action close over top of this level. We do have upside price targets now that we have closed over this level at 423 and 426. So you can still see the price action and the trend are bullish and the path of least resistance is still to the upside. So critical support levels now are going to be 418, 415, and that 20 simple moving average right around 412. Upside resistance is going to be 423 and 426. Next up is the NASDAQ 100 triple Qs, and we saw the triple Qs going up 0.36% today and closing back above the 5 EMA yet again and still holding on to that bull trend. You can see intraday we did have volatility and we did find support right on top of that 20 simple moving average at 337. Remember, the 20 simple moving average is the strong support level in bull markets and we still do see that 20 simple moving average holding up as support. So that is a great sign for the bulls and it does show that the triple Qs could likely continue to go higher from these levels. So watch critical support levels at 339 and that 20 simple at 337, and remember we would need to close below 337 for the triple Qs to start reversing the bullish trend. Right now, the upside price targets are 343, 345, and 350. On the Dow Jones, we went up 0.65% today, closing back above the 5 EMA and still holding on to the bullish trend. The critical support level is at 338, and it did hold up intraday with the test of the volatility. So we have critical support at 337, and that's also the level the Dow would need to close below to start reversing the bullish trend. Upside resistance on the Dow is going to be 341 and 347. On the Russell 2000, we dropped today, going down 0.37%, closing back above the 5 EMA, but still holding up above that support level at 227. Remember, the Russell 2000 is in a full bull trend and the price action continues to close above support, so it does favor the fact that we're going to see the Russell continue to climb higher. Look for the next price targets above at 230 and 234. Next up is ARKK, which we see going down 2.89% today, and Cathie Wood just cannot catch a break. ARKK was closing back over the 50 EMA for 3 days in a row and then got flushed out today, closing back below all the moving averages. So right now it does look like ARKK is going into another consolidation period as it continues to try to break out and form a higher high, which it just can't seem to do. So look for upside resistance at the 50 EMA at 125, and our resistance level is right around 128. Downside support is now going to be right around 119 and 115, which is the gap close. Next up is the VIX, which is our fear indicator, and we see the VIX climbing a little today, closing at 17.6. It's still trading below resistance at 18.2, and remember the VIX needs to get back into the 20s for us to see a stock market correction. So right now the VIX is still showing us that there's not a lot of fear in this market, which does favor all-time highs. Remember, as long as the VIX is below 18.2, we're likely going to continue to go to all-time highs in this market. So watch the VIX very closely, and if we start seeing it spike into the 20s, that could be an early indication that we've seen the top in this market and we're due for a correction. Next up is gold, and we see gold breaking down below support today, closing below 17.76, but still holding up above that 13 EMA. The strongest support level is going to be the 50 EMA right around 1765. Upside price targets are now 1776 and 1829. On silver, we closed below the 5 EMA today, but also found support intraday at that 50 EMA right around 25.8. Look for silver to continue to test the price target above at 2650, and a breakout over there means we're heading to 2760. The strong support on silver is going to be 2580. On Bitcoin, we're currently down over 2.7%, and it still does look like Bitcoin was just going through a dead cat bounce. Remember, for Bitcoin to not be in a dead cat bounce, we needed to see a daily close over 55,600, and we did not see that yesterday and again today. You could still see we're in a bear trend, and we're still trading below the 50 EMA. I'm looking for Bitcoin to retest support levels at 51,300, and if that level doesn't hold up, we're likely coming down to the next support leg at 45,000. If 45,000 doesn't hold up, Bitcoin is going all the way back down to $30,000. So Bitcoin's going to have critical support tests very soon at 51,000 and possibly 45,000, with still the critical resistance level above at 55,600. If Bitcoin can close back above this 55,000 level on a daily close, that will signal that this correction is likely over and Bitcoin could go back to all-time highs. On Amazon, we went up 0.37% today and did meet that price target above at 35.82 yet again, but did close below that level. If we can get a close over 34.82, that does mean the next price target is all the way up here at 35.98. So Amazon is still in a very strong bull trend and the price action continues to look bullish. So I do think Amazon will continue to hike up towards that next price target at 35.98. We'll have critical support levels now at 35.83 and 34.42, with the strongest support level being the breakout trend line at 33.69. On Tesla, we dropped 2.5% today and did find support at that support level I gave you last night at $670. This is do or die for the Tesla bulls because if this support level does break down, that will be a lower low on the daily chart and it means we're coming all the way back down to 618. However, if 670 support can hold up and the Tesla bulls can get back above the 50 EMA at 702, Tesla can still go back into a bull trend and try to break out of this resistance trend line. So upside resistance on Tesla is now going to be 702, 718, and about $740, with downside support at 670 and 618. On Apple stock, we were pretty flat on the day after having that huge gap up open right around the price target at 137. So consider that price target at 137 met, but we need to break and close over that level to get to the next price target around 140. We did close below support at 134, which is not a bullish indication because Apple failed to hold up above that support level. However, Apple's still in a full bull trend and it's still trading above the 20 simple moving average. So we have to give the bulls the benefit of the doubt and they will get another attempt to try to crack above these price targets going into tomorrow. So look for upside resistance on Apple at 134 and 137. On the financial sector, we had a very bullish day today, going up 1.78% and closing well above the 5 EMA, outside the upper Bollinger Band, and still holding on to that strong bull trend. On the industrial sector, we went up 0.7% today, closing well above the 5 EMA and still holding on to the very strong bull trend. On the healthcare sector, we dropped 0.4% today, getting another price action close below the 5 EMA, but still holding up with the very strong bull trend. On the energy sector, we saw follow through for the bulls today, going up 1.12%, closing well outside the upper Bollinger Band and developing a bullish trend. The energy sector now has a full bull trend with bullish price action and it could start running in a bull market yet again. So going back to the S&P 500, you can still see that we have bullish sectors across the board and now even the energy sector is joining the bullish rally. With all of these sectors showing so strongly bullish, it's going to be very hard for the S&P 500 to drop. We saw the S&P 500 closing at all-time highs today, and if we get another confirmation price action bounce off of support, we could be seeing these next price targets above at 423 and 426. So right now the VIX is still low, which means low fear, and we still have bullish sectors across the board, which does imply the fact that the path of least resistance is still higher in the stock market. So this is not the time to be becoming bearish, and this is not the time to be trying to short the market because the market can continue to go higher and most likely will. So watch for a possible bullish shakeout going into tomorrow, but if these critical support levels do hold up and we still maintain bullish price action with a bullish trend, we're very likely going to see a very bullish week going into the beginning of May. Also remember, on the Stocks Channel Discord, I'm giving you intraday updates and analysis on the market to always help you stay on the right side of the market. I'm also bringing new trade ideas to you weekly to help you absolutely crush this market. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description of the video. So next up, let's take a look at our trade idea Shopify, and we see Shop going down 4.32% today and closing below that support level right around 1242. We did see Shop have a very bullish day yesterday, and it's no surprise to see Shop cooling off a little bit after that monster run up. We were outside the upper Bollinger Band yesterday's close and at today's open, and we did see some profit taking. Right now on the moving averages, we can see they're all starting to stack up to the bull side, and Shop is getting ready to go back into a full bull trend. The strongest support levels on Shop are going to be right around 1200 and 1178. Those are the levels that if you can get Shopify at, you will likely see the best results because we are going to likely hit these price targets above at 1330 and 1390. So the best buying opportunity on Shopify is going to be right around the 1170s with upside price targets that'll then be at 1238, 1332, and 1390. Remember, we're going into a full bull trend, so the price action should continue to go higher in Shopify in the upcoming future. Next up is our trade idea Disney, which we saw going up over 1% today and closing right on top of the 50 EMA. Remember, Disney is in a consolidation and it could have a very bullish breakout. If we see Disney breaking out and closing above 186, we could get to these next price targets in a flash. The upside price targets are going to be the breakout at 186, 189, 192, and 194. Downside support is the 5 EMA at 184, and the strongest support level is 181. Remember, we're cutting Disney loose on a close below the 181 support level at some percent below this support, which is defined by our risk management. So right now, Disney has a great risk reward trade setup because we're very close to the downside support and we have upside price targets that take us into the mid 190s. Remember, if you're looking for more trade ideas, they're on the Stocks Channel Discord and I'm adding more weekly. You can find out how to join the Discord server by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.